Hi everyone, this is Alert Day Trading. Hope you're all doing well. And today I want to talk about what a trailing stop loss is, how I use a trailing stop loss, and why I think it's important. So basically, I'm just going to kind of review a trade I took yesterday. It was GNMK. And if we kind of zoom out here, and so today you can see not much happening, but yesterday we had a nice move up, and here was this all-time high right here at the after market hours the day before. This is Tuesday, but then on Wednesday you can see that the price was pushing up higher and it broke above that all-time high. And so I took that trade and it worked out really well. And so I eventually started to use trailing stop loss. And so that's pretty much what I'm going to talk about here. And basically a trailing stop is you put either a percentage amount or you put a dollar amount. It could be any amount you want. For example, if the price is, let's say right here, the high is 1983. And let's say you put a 50-cent trailing stop loss. Well, that means that if the price goes 50 cents below the most recent high, then that stop loss will be triggered. So at 1933, your stop loss would be triggered, and it would have been triggered on the way down over here. And so, for example, here would be the trade, and you can see it's about a 10 to the trade I took was to break above $19, and the stop loss was just under 18.80. So that's about a 20-cent risk, and I'd like to sell. And I put limit orders for every risk amount, for every increment above the current price or my purchase price. So if I'm buying at $19 and my risk is about 20 cents, my first take profit will be at $19.20. My second take profit is at $19.40. And you can see the price is continuing to rise. So once I get past about the second risk, I start to consider implementing a trailing stop. I'll take profit at the third risk, so that would be around 1960. And then finally, I like to take profit at the fourth risk amount, which would have been around 1980. Okay, and so once I reach that level, then at that point, you don't really know how much higher the stock can go. So that's where I think a trailing stop is really helpful. So when your original risk amount is 20 cents, and you generally want to at least have a minimum of risk to reward of 2 to 1. So once you pass that 2 to 1 risk to reward, anything after that is going to be a bonus toward your trading strategy. And so I think once you reach your fourth risk amount of take profit, if you put a trailing stop, that it will not go below your second risk amount, then you're guaranteed to have a trade that's better than a risk to reward of 2 to 1. So for example, we buy at 19 cents. Stop loss is 18.80. So take profit at 19.20. You raise your stop loss to break even, so you're guaranteed to at least have 1 to 1 risk to reward. The price reaches 19.40. Then you can consider either keeping it your stop loss at break even, or bringing it up to about 1920. Now you're guaranteeing at least a 1-to-1 or 2-to-1 ratio. Once you get to 1960, bring your stop loss again. Now you're guaranteed not to make any loss, and everything will be profit. And then once you get to that fourth risk, you don't want to keep having to raise your stop loss, so you just put in a trailing stop at that point. And then you can see how far the stock will take you. And I actually did do that, and I ended up getting stopped out on the way down, but I didn't have to sit there and keep raising my stop loss levels. I feel like after, like I said, the up to the fourth level, that's really good potential for the stock to continue rising. And it didn't, but at the same time, it still could have. And in my statistics, I'm noticing it, once you're passing risk to reward of 3 or 4-to-1, there's definitely good potential for it to just keep going. I've had trades go up to 9. I think I've had one go all the way up to 16. And, definitely having a trailing stop in that situation helps you in maximizing your profits. You can still take profits along the way, but at least exiting the position completely, you definitely, I think, want to have a trailing stop loss. And just to make clear, my opinion is only to use a trailing stop after you've passed at least your 2-to-1 risk to reward. I'm mostly trying to use it once you get to either 3 or 4 risk to reward, and just kind of putting that trailing stop right below either your 1-to-1 or 2-to-1 risk amount or profit amount. The way that I like to think about it is, if you're risking let's say $1, so if we're risking 20 cents here, not $1, but one risk amount, our goal is always to try to get to at least 2 reward. So that means our goal should be to try to get to 1940. So here's 1940. Okay. And here's 1880. So our goal is to get to this red line. So we're risking 1 to get to 2. Well, once we get to the first take profit, now if we don't raise our stop loss level, we're now risking 2 to receive 1. So the risk to reward is no longer in your favor, which is why I believe you should bring your stop loss to break even, at least a portion of it. You can still keep your original, maybe half of whatever's remaining at your original stop loss, but I definitely think you should consider raising your stop loss to break even. So now you're risking 1-to-1. Okay, so now let's say the price passes this level, and now we're trying to get to the third risk amount. So same thing again. If we keep our break-even stop loss here, I'm sorry, down here is break-even. Now we're trying to get to this other level. We're still risking 2 to receive 1. So you might also want to consider raising your stop loss to this first profit target. So you're maintaining this 1-to-1 risk to reward after you've reached your profit targets. But now once we get to, the fourth level, you can consider accepting the reality that we might go to a 5th level or a 6th level. So in that case, it may not be anymore that you're risking 2 to receive 1. You might be risking 2 to receive 2. So in that case, your trailing stop in my opinion, should be 2 risk levels in hopes to make 2 profit levels. And that's just kind of the way I see it. So if you have any more specific questions about it, about trailing stop or stop loss in general, feel free to let me know. But I just kind of wanted to make a video about that and talk about my thoughts about trailing stop loss and how it works for me and how I kind of see it. But basically, what it comes down to is just ask yourself, how much are you risking in hopes to make how much? And if you can always keep that to at least a 2-to-1 ratio, so your reward will always be 2 and your risk will always be 1, you should be in a positive direction as long as you're winning at about 50% of your trades. So at least 50% of your trades. So that's definitely something to consider. There is a whole breakdown on what winning percentage you need depending on each risk to reward. So if your risk to reward is 3-to-1, you don't need as good of a winning percentage. Although I personally think even psychologically it's nice to have at least a winning percentage of at least 50%. But then if it's less than 50%, you really need to make sure that your risk to reward is well thought out, and you're getting really good statistics on that. So far my strategy seems to be doing really well in terms of winning percentage and risk to reward. I'm probably averaging anywhere between risk 1 to 3 on most trades. So I'm risking 1 and I'm gaining 1 to 3 profit. And sometimes you do see more than that. Like I said, most recently I had a trade that went up to 9 reward, risking 1. So that was a really nice trade. And so in that case also, you definitely want to use a trailing stop loss because you just don't know how much further it'll go. And once you're already in profit, you can afford to take less of a profit in hopes to make more profit. I think that's definitely a good way of thinking. To be optimistic that if the stock is continuing to rise after already taking profits, that you want to see how much further it'll go. Although you do want to keep a really strict guidelines on your raising your stop losses and how to use your trailing stop loss, because you definitely don't want to give back your gains as well. So thanks for watching. I hope it was helpful. These videos are also helpful for me to just kind of talk about my process and have it make sense to me. And if I can have it make sense to you, that's definitely a bonus. So if you have any specific questions, let me know. I did also take a couple more entries on this trade. I used the 5-minute chart. And you can see a similar risk to reward on that entry. And I did also use the 1-minute chart on this stock, and you can see how that trailing stop loss was beneficial because the risk was really minimal with the 1-minute chart. So that was a really nice return on that trade. So anyway, like I said, thanks for watching. If you have any questions, feel free to let me know, and good luck.